The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, friends. Happy Thursday. Welcome to another edition of Breakout Investing on TFNN. Phone number 877-927-6648. You can catch my show every day on TFNN from 3 to 4 Eastern. I'm going to be going live with Breakout Investing for the rest of this week. Monday, Tuesday, Wednesday, Thursday. Next week and Thursday will be my last show on TFNN. An opportunity came up that made sense for me to accept, so I will be moving on, but I appreciate all of the great listeners out there. You can pick up the show as a podcast on iTunes if you can't listen live. Don't forget you can listen to all TFNN programming on your smartphone. Just type in tfnn.mobi in your smartphone browser. You can listen to the stream that way as well. And don't forget about Tiger TV on the homepage of tfnn.com. Channel 1, the show is carried live. It is archived on Channel 13. If you want to watch Tiger TV on your handheld device, you can do that as well. Open your smartphone browser, type in tfnn.com. Over on the right-hand side of the homepage, just click the box with the mobile devices in there. It will start streaming on your phone very shortly. All right, let's take a look at the markets here. Cyprus still in the headlines. Actually had a few unsettling headlines out of Europe earlier today. Apparently, Cyprus is going to restructure their banking system, and that is going to most likely pave the way for future aid from the European Central Bank. The ECB gave Cyprus basically an ultimatum earlier today, saying that they need to, have something in place by Monday. So the market is moving based on news out of Cyprus. Still a very fluid situation. We also had some Eurozone manufacturing data that came in today worse than expected, so that was added a little fuel to the fire here. The Eurozone Manufacturing Purchasing Managers Index came in at 46.5 for March, compared to a 47.9 reading in February. So some deceleration there, lower than expected, like I said, and a 4-month low. How are the U.S. markets responding? Well, let's start by taking a look at the NASDAQ Composite. It is trading in the middle half of its trading range today, down 26 points, almost 26 points, 0.8% lower to 32.28. Volume is higher on the NASDAQ today, so we're tracking about 5 to 10% higher than Wednesday. Remains to be seen if we're going to end up with a higher volume decline here. If we do, that would be higher volume decline number 4 for the NASDAQ Composite. So we're starting to see, signs of institutional selling in this market. Not massive, not excessive dumping of shares by institutions, but seeing some mild signs of institutional selling that I think is worth noting. When you look at a chart of the NASDAQ Composite, back in February, we had some pretty intense distribution in the market for a 5-6 day period, and then, boom, the NASDAQ just shrugged it all off, started moving higher in light volume. Here we are again with more distribution popping up in the market over the past 5-6 trading sessions. At some point the distribution is going to mean something. There is still a bid out there for stocks. There's no doubt about it. I think there are people on Wall Street that realize that the U.S. economy is, continuing to recover. Projections of 2% GDP growth by the end of this year probably are conservative. We're probably going to see growth a little better than that. Valuation-wise, stocks are still cheap in the U.S., so there's still a bid out there. But we have come a long way from the mid-November lows with not much in the way of consolidation. So we've come in a little bit here. NASDAQ Composite holding for now above its 20-day moving average, which is at 32.10. Its 50-day moving average down at 31.76. So that is a look at the NASDAQ Composite. Let's move up here, take a look at the Dow Jones. we'll see that the Dow is down about 61 points right now, 0.4% to 14,450, and the S&P 500. We'll see that the benchmark index is also it's a little in the bottom half of its trading range here, down close to 9 points to 1550 basically. So S&P 500 still holding above its 50-day moving average as well. So mentioned at the top of the show, I think I'm just going to make quick mention of it each show if you haven't tuned in for a couple of days. But I did announce that I'm going to be ending the Ultimate Growth Stocks newsletter. I've been doing that with TFNN for a couple of years now, and it's been a great run. But an opportunity came up for me that I'm going to take advantage of. So the newsletter, the last edition of my newsletter, is going to be Tuesday, March 26th. Next Tuesday, March 26th, and I will continue with Breakout Investing up until close to the end of next week. Good Friday, the market will be closed, so my last Breakout Investing show will be Thursday, March 28th. So we'll put the finishing touches on the newsletter next week, and we'll wrap up Breakout Investing next week. But appreciate very much all of you who have listened in recent years, and I am going back to Investors Business Daily. An opportunity came up for me there that I'm going to take advantage of. Just makes sense for me to do it at this time. So I'm excited, and that is that. All right, so there's a look at the major averages. Again, we do have distribution in the market that's worth paying attention to here. Some kind of strange action in leading stocks that is worth noting. The weakness in the tech sector today, of course, we heard from Oracle after the close last night. Let's take a look at Oracle here. Big software bellwether. I mean, just a lot of carnage in the stock today, down 9.2%. Wonder the last time Oracle has been down 9.2% in one day. Last trading at 32.47, gaps below its 50-day moving average. Its 200-day moving average is at 31.85, so it's not too far from that 200-day line. The numbers were not good at Oracle. Earnings up 5% from a year ago to 65 cents a share. That was a penny below. Sales down 1% to $8.96 billion. That was well below expectations. You basically have this move in software where customers are switching to internet-based cloud systems, basically Salesforce.com, CRM, and that has lessened the demand for Oracle's servers and databases related services. New software license and subscription sales at Oracle fell 1.8% to $2.33 billion. That was more than expected. So Oracle clearly getting its lunch eaten by CRM. CRM actually gapped up not that long ago, but this is when I'm talking about kind of suspicious action in growth stocks with seemingly decent fundamentals. Salesforce.com had a big day in the market when it reported strong earnings, and it looked like a nice breakout, but you could see the breakout basically went nowhere. It tried to break out on March 1st, and then boom, right down to its 50-day moving average, and CRM right now for 3 straight days now below its 50-day moving average. This is a former holding in the Ultimate Growth Stocks model portfolio. We exited this position a little while back for a profit. Salesforce went from looking pretty good technically to not so good. Another name in the software space under pressure today, BMC. This is a name we don't talk about very much, but shares were halted for a little while today. It hit an intraday high of 47.98. The stock now is trading at 45.32, up 3% on the day. According to Reuters, it's looking more and more likely that BMC will be taken private at some point in the future in a deal that could be worth more than $6 billion with a B. So after early strength, the BMC is off its highs, but still up 3% to 45.32. Sentiment in the tech sector not helped very much by the fact that Cisco Systems and Juniper Networks downgraded today to underperform from market perform by FBR Capital. You can see shares of Cisco gap underneath its 50-day moving average, down 4% to 2080. FBR has a new price target on Cisco of 17 from 22, and Juniper, JNPR. Let's take a look at Juniper Networks. Not showing nearly the price strength that Cisco Systems was showing. Juniper has been under a lot of selling pressure basically since the start of the year. It's down 2.4% today to 1884. Notice how it's down at its 200-day moving average here, which again is a long-term support level. FBR Capital also downgraded Juniper to underperform from market perform. Price target cut to 15 from 18. So sentiment not all that great in the tech sector today. Apple, very interesting chart here. Let's take a look at Apple. Look at that 50-day moving average. See this blue line in the daily chart here? See that 50-day line has been resistance for some time now, and Apple hit an intraday high today of 457.98, and its 50-day moving average is at 459. So it got to with less than 2 points of that 50-day moving average, but for 3 days now it has been bumping up against that 50-day and not making much progress. So we'll see how strong a stock Apple is. You know, again, when you look at a weekly chart for Apple, you'll see that it did retrace a big portion of its gains and basically went back down to its breakout area back in late 2011, 2012, early 2012. You see that like clockwork, just bounced, and now it's trying to move above resistance, either its 50-day moving average or the on a weekly chart the 50-day line is referred to as the 10-week moving average. Either way, seeing some initial resistance here. Had some upgrades today. Let's take a look at Away. Remember Away? We mentioned Away on the show yesterday. Let's see here. Let's go to Home Away. Here it is, up 4.7% today to 31.99. 31.99. It is off its highs, actually trading near its session low now, but good tight trading in recent days. We mentioned it yesterday to keep an eye on this one for a possible breakout. Nice heavy volume breakout today, over 31.25. Morgan Stanley upgraded the stock to overweight with a $36 price target. HomeAway operates an online marketplace for vacation rentals. The stock is also being helped today on news of a strategic partnership with TravelMob. TravelMob is an Asia-based marketplace that matches owners and managers of vacation rental properties with travelers. So interesting company here, HomeAway. Good fundamentals, showing excellent relative price strength in the market. Good solid day for this stock. All right, folks, when we come back, a lot more news to get to. News on Priceline, Expedia, TripAdvisor. Yahoo gets an upgrade. That one continues to perform very well. We'll check on some economic data, a whole bunch of other good stuff. We'll do that when we come back in about 3 to 4 minutes. Stick with me.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Gold continued its move higher today. The April gold contract settled at $1,613.80 an ounce, up $6.30. 0.4% gain. This despite comments or a note from Societe Generale earlier today. Not all that keen on gold prices. SocGen sees gold under $1,400 an ounce by year end. Checking in on the GLD, it is marching its way higher. It's been moving higher for a couple of weeks now. Closing in on a key resistance level here, 50-day moving average at 157.84. The GLD right now at 156.27, up about 0.6% on the day. Not much movement in the U.S. dollar index, down less than 0.1% today to 82.71. Bond yields a little bit lower. 10-year note at 1.93%. 30-year bond 3.15%. April crude oil $92.45 a barrel, down $1.05. That is the official settle at the New York Merc. Evercore came out today with ratings on 3 online travel sites: Priceline, Expedia, and TripAdvisor. Evercore started coverage of Priceline with an overweight rating. Let's see how Priceline is responding to that news. And you can see not very well. Hits a high of $699.49 a share. Started off started off solid. Earlier this week, Priceline did undercut its 50-day moving average in heavy volume. Tried to get back above the line yesterday. Didn't make much progress. The upgrade or initiation today by Evercore resulted in a nice pop early for Priceline, but it is down near its session low, down $1.31 to 686.27. Expedia also coverage initiated here as well with an equal weight rating. Expedia getting hit pretty hard, down 2.3% to 61.85. And then TripAdvisor, which actually had a nice breakout recently over $49 a share, still holding gains nicely, down 2.5% today to 51.88. Evercore starts TripAdvisor with an underweight rating. Didn't see the specific reason, but I assume valuation might have something to do with it. You can see TripAdvisor's been doing a good job of holding on to its gains. This looks like a viable business, and maybe a little more speculative than Expedia and Priceline, but excellent relative price strength in the market, and fundamentals, not showing explosive growth, but showing consistent growth, and that definitely matters. How about Yahoo? Yahoo has just been just a tremendous performer in the market, and it is outperforming nicely today, up 3.3% to 22.82. This stock got an upgrade to outperform by Oppenheimer, $27 price target. So good day for Yahoo as well. Some financials under pressure today. Wanted to take a look at Raymond James Financial, RGF. RGF really getting hit hard today. Massive day of institutional selling in Raymond James. It had been, moving higher. You can see its daily chart here. Raymond James down 4.5%. today to 45.94. Its 50-day moving average is at 44.71. So not a breakdown yet, but certainly a bearish day of price and volume action for Raymond James. And financials, by and large, are getting hit pretty good today. A couple of other names I've been following: Affiliated Managers Group, AMG, down a little more than 2% to 150.64, and BlackRock, BLK. This is the asset managers that owns the iShares ETF brand. BlackRock under some pressure as well, down 2% to 253.64. Very extended, all of these financials. This is the one of the main problems with this market. You have a market wedging higher, starting to see some distribution. You feel like you should be putting money to work, but I follow just a very basic rule. If the market is not giving me stocks to buy, I'm not going to buy. I'm not going to force the issue. When you force the issue, that's when you start having to cut losses unnecessarily. But a lot of the financials are extended, including BlackRock. Finally, seeing some selling pressure today, down 2% to 253.64. Did have some other earnings reports today to take a look at. Let's check in on Tumi. This is a luxury luggage maker. A new issue, hasn't been trading as a public company for very long. Earnings up 32% from a year ago to 25 cents a share. That was a penny below views. Sales up 19%, respectable, to 126.9 million. That was below expectations as well. The company said it expects to grow annual revenue by 18 to 20% in 2013. That sounds pretty good, but it guided full-year earnings a little below expectations. Stock down 1.2% today to 23.56, well off its lows. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. TFNN legend Bud Rolfs has come out of retirement to bring you a special report and a one-time only webinar that will show you what's going to happen in the markets over the next 4 years. Bud Rolfs is the former chief technical analyst of the Tiger Trading Post at TFNN and is a true market innovator who has taught thousands of students how to read charts and be more successful traders. Don't miss this chance to learn from a TFNN legend and get this timely market advice that will put you on the right side of the market for the next major move. Plus, he'll show you his expert analysis on the current major markets and explain the technical setup that is predicting a move of over 50%. We're offering this one-of-a-kind special package for only $179, and the moment that you sign up, you'll gain access to Bud's 11-page executive summary where he provides you with the keys to his market call and prepares you for his live 90-minute webinar on March 21st. Don't miss this one-of-a-kind offer. Sign up today on the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone. Let's check in on the markets here. About 25 minutes, a little more than 25 minutes left to go in Thursday's session. We've got the Dow down 60 points, 0.4%, 14,452. Tech stocks lagging. NASDAQ down 26 points, 0.8% to 3228. S&P 500 down close to 10 points, 0.6% to 1549. We did have a slew of economic data earlier today. Let's touch on some of those data points. First of all, the American Association of Individual Investors sentiment survey for the week of March 20th showed that the bullish percentage fell by 6.5 percentage points, down to 38.9. So the number of bulls is shrinking. Those neutral, that's at 27.7% right now. That added 5 points. And bearish, number of people bearish on this market at 33.3%, up 1.3 percentage points. So I guess the main takeaway there is that the number of bulls is declining out there. So weekly jobless claims earlier today up 2,000 to 336,000. The estimate was for claims to rise more than that to 345,000. claims have been below 350,000 in 5 out of the past 6 weeks, so that is good news. We had existing home sales for February, came in at 4.98 million units, mostly in line with expectations, basically flat from an upwardly revised 4.94 million in January. And the Philly Fed, pretty good reading here as well. The Philly Fed's Business Conditions Index came in at +2 after a -12.5 reading in February. The consensus estimate called for a reading of -3, so better than expected reading here. The Fed also said new orders climbed to 0.5% in March from -7.8, the first positive reading in 3 months. Meanwhile, the index for hiring plans increased to 2.7% from 0.9% in February. 877-927-6648. Let's talk to Tom in Tampa. How you doing, Tom?
Hey, good, Ken. I hate to hear that you're leaving. Man, you've been invaluable. I really have enjoyed listening to you for the last 14 months.
Oh, I appreciate it. Appreciate it, Tom, very much. Thanks for the support. Thanks for the comments.
Are you still going to be coming on Tom's show in the afternoon from time to time?
Yeah, we'll see. We'll see how that works out. You know, I'm just going to kind of transition here, and you know, Tom is a good friend of mine. We go way back. I first met him back in 2000, 2001. Something like that. So I don't see why not. But I'm just gonna get settled, and we'll see what happens.
Yeah, good. Question about IBD. I noticed that newspapers got out there. You know how they got the daily current outlook on the market, like confirmed uptrend or confirmed downtrend. That's almost an invaluable tool, I guess. I just kind of stumbled across it a couple of weeks ago. I mean, if you're a guy's doing some swing trading, some day trading, which I do kind of a combination of the two, that's a really good tool, because, I mean, there a couple of weeks ago, I was just getting stopped out of shorts beyond belief, and I'm looking at this thing saying confirmed uptrend. I'm thinking, okay, you know.
Yeah, confirmed uptrend, and now I know why I'm getting stopped out of short positions. Yeah.
Right, exactly.
Yeah, it's their flagship. It's their flagship column. You know, the big picture column. I think it's probably what they're most known for. And yeah, they have this three-tiered, market outlook system. I mean, I've been following that. It's where I got my start in the markets using IBD, and so yeah, the big picture's got just kind of keeps you in tune with whether we're in an uptrend. It's got a very good record too. I mean, when stocks are bottoming, they'll switch that outlook to say uptrend, and we're in a point right now where if we continue to see higher volume declines in the indices, and it remains to be seen today, Nasdaq volume is tracking slightly higher than yesterday. But if we do end up with a higher volume decline with the Nasdaq today, that would be the fourth higher volume decline. And once that gets to 5 or 6, then you'll probably see a change in market outlook in that section. So,
okay, yeah, all right. Well, anyways, good luck, and really, like I said, you've been outstanding on his show.
Well, thank you very much, Tom. It's kind of you, and I appreciate it very much.
Okay, have a good day, Ken.
All right, have a good one. Take care. All right, so thanks very much for Tom for those comments. I appreciate that. So economic data, again, not too bad today. Good reading from the Philadelphia Fed. Existing home sales mostly in line, but we did remember yesterday we had great earnings from Lennar, and today let's check in on KBH. KB Home, they reported earnings before the open today, and you can see a big move for KB Home today, up 3.3% to $22.29. Yet another stock that's extended out here. Too late to buy now. A lot of charts that look like this. You want to see these stocks pause, form a base, then you'll get new buying opportunities. But you don't want to chase out there. It seems like for every 100 growth stocks that I look at that interest me in terms of fundamentals and technicals, I can just maybe find a handful that are still within buying range. But with distribution starting to make its presence felt in the market, kind of wait and see how this all plays out. But KB Home having a good day. They lost 16 cents a share. That was better than expected. Loss of 22 cents was expected. Sales up 59% year over year to 405.2 million. That was much better than the consensus estimate. Lennar beat their revenue number by a wide margin yesterday. This time around, KB Home 405.2 million. The estimate was for 359.8 million. Net orders at KB Home rose 40% from a year ago to 1,671 homes. Backlog, which is an indication of future sales, rose 25% to 2,763 homes. And Lululemon, let's see if buyers eventually came into Lulu here, and they have a little bit. Stocks up 86 cents today, 1.4% gain to 64.74. Still bearish technicals here. It is has fallen below key support levels around 67.68. But the numbers at Lulu, earnings up 47% to 75 cents a share. That beat views by a penny. Sales up 31% to 485.5 million. It was a little better than expected. Same-store sales up 10% in the quarter. For the current quarter, the company sees revenue between $333 million and $343 million. Same-store sales growth of 5 to 8%. Earnings of 28 to 30 cents. That guidance is basically below expectations. So, see, headed into today, Tuesday and Wednesday, big moves lower for Lulu headed into the earnings today. Let's see, Ross Stores, ROST, also in the retail sector. See what Ross had to say in terms of earnings and how the stock is reacting today, and it's having a nice day, up 3.5% to 58.14. Has rallied all the way back to its 50-day moving average. Ross Stores earnings up 26% to $1.07. That was in line. Revenues also in line, up 15% to 2.76 billion. But Ross Stores has definitely turned into a laggard in the retail sector. But again, you look at a weekly chart for Ross Stores. Let me just pull up a weekly here, and we'll see a stock that has made, really made a massive price move, basically from the summer of 2011 all the way through the summer of 2012. Was a big monster stock in the market. So looking pretty weak here. I would say significant resistance at the 61 price level, trading right now around 58.17. Had a couple of IPOs. Let's check in on MODN. Remember Model N? Model N came public yesterday. Had a big day. The stock is down 2.4% today to 1951, but had a superb first day of trading. Today we had a couple of other IPOs. Enanta. Not sure of the pronunciation. Sometimes these IPOs are tough. Enanta Pharmaceuticals, ticker ENTA. They develop small molecule drugs to treat hepatitis C. They raised $56 million by offering 4 million shares at 14. The low end of the proposed range to 14 to 16, but at last check, this was actually doing pretty well. Let's check in on Enanta Pharmaceuticals, and it's 1741. Yeah, so it's up 24% on the day. So good debut for Enanta Pharmaceuticals. And then a healthcare REIT, AVIV. AVIV. This is Aviv Real Estate Investment Trust. They operate 258 post-acute and long-term care skilled nursing facilities in 29 states. They offered 13.2 million shares at 20. That was at the high end of a proposed range of 18 to 20. It is trading at 22.63, up a little more than 13% on the day. So these IPOs are, having pretty good debuts in recent weeks. Wouldn't say the IPO environment is exactly humming, but those companies that are coming public are, by and large, enjoying pretty solid first days of trading. Another healthcare REIT in my screens. I noticed that has been doing very well. Yes, it's extended. You can't buy it because it's run too much. But Omega Healthcare, which is ticker OHI, you can see the monster move this stock has made. Remember all these stocks that broke out right when the NASDAQ gapped up in early January? Well, that's exactly what Omega Healthcare investors did. You can see the gap up over 2350, and it's at 2886 right now, but has not consolidated gains at all. So don't want to chase it up here, but another healthcare REIT doing pretty well. Let's check in on shares of Tupperware in my screens here. Just love how this stock is holding gains here, moving sideways. It's only up 7 cents today to 79.76, but just good tight sideways trading in the chart. Let's take a look at a weekly chart for Tupperware, and what you have here is a technical breakout. Again, when the market really started to move in early January, that's when Tupperware broke out of this base over 67 thereabouts. It's at 79.76 right now, but it is finding support at its 10-week moving average for the first time. So this is interesting because the stock is buyable when it finds support at the 10-week moving average for the first time after a breakout. You can start a small position. Maybe it's not as big a position as you normally would buy as if a stock were breaking out of a base like Tupperware did in early January, but it's showing good technical action here, support at the 10-week moving average after a breakout in January. So Tupperware looking pretty good here, and on assignment. I know we mentioned this one yesterday. This is a IT staffing services firm. They made a big acquisition last year that's driving revenue growth currently, and you had a little breakout yesterday for on assignment. This one still looks like it's within buying range. When I say a stock is still within buying range, it's not extended, but anything you're buying right now, you have to keep in mind the current unsettled nature of the market. It does still seem to be a market where the buy the dip mentality is out there. But let's just check in on the major averages here. Yeah, so now we're not seeing much dip buying today because the Dow is now down about 77 points. That was worse than when we checked it about 15 minutes ago. Dow trading at 14,435. NASDAQ down 0.9% now, 30 points lower to 3224. S&P 500 down close to 12 points. So major averages bleeding into the close here. So names like Tupperware on assignment. Some of these stocks breaking out of 3 weeks tight patterns. You have a name like FleetCor, FLT. Even that one, if you're buying 3 weeks tight, this one is still within buying range, but you just got to be careful. Use stops. You don't want to go all in here. If you've got a lot of money to put to work, you're just going to nibble selectively, keeping in mind that signs of distribution are starting to crop up in the major averages. And probably one of my favorite names out there right now, a stock that I still believe could be in the early stages of a move here. Hard to find a better looking weekly chart here than Netflix. And Netflix right now, for the week, it's down 1.3%, but it is just moving sideways. 10-week moving average at 172. I expect if the market doesn't completely roll over here, I expect that 10-week moving average for Netflix to hold. But this is looks to be an actionable stock. The swing point is 197. An iffy market, but really like the technical look of Netflix here. So we'll monitor this one in coming days as well. All right, folks, headed into our final break of the day. We'll put the finishing touches on this edition of Breakout Investing when we come back. Stick with me.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks. Checking in on Solar City. Remember Solar City? They had a very successful IPO back in December. Went public at $8 a share, and it has more than doubled from that price. Last trading at $17.55, up 12 cents on the day. But look at the 50-day moving average here. Respecting that 50-day moving average so far. This is one that still has potential. it's a decent chart, but technical's a little bit shaky. They're losing money. I typically don't like to look at companies, even if there's a good story of growth going forward. Solar City is still not profitable. The sales growth has been decelerating in recent quarters, but this is the company they sell. They lease solar energy systems to commercial and residential markets. It is a new issue with a strong chart, though, so it bears watching. Question is, sales growth decelerating in recent quarters. When they recently reported earnings, I would have much rather have seen an acceleration in sales growth. I mean, lack of profitability, sometimes you can look past that, but only if you're seeing accelerating top-line growth, and there's a lot of other positive qualities to consider as well. So right now, about the only positive thing I see with Solar City is a good-looking chart and the fact that it's a new issue, because sometimes, new issues, they can deliver the biggest gains in the market. So I think this one can still work, although the fundamentals are a little bit suspect at this point. So Solar City still holding above its 50-day moving average. And let's take a look at Spirit Airlines. This is one of many airline stocks that are very extended in price. If we do get a market pullback, boy, I would love to be able to pick up this one around $21, $22 a share. It is one of the better run airlines out there. You can see it's still in the early stages of breaking out of a long base here, but it looks like 4 up weeks out of 5 for the stock. Again, it was a $20 stock not that long ago, so it's now $26.52. So we'd like to see what the pullback looks like here. 10-week moving average at 21.39 is probably going to be a likely resting spot for this stock eventually. So another name that I don't want to chase up here. After the close today, let's take a look at Nike. Technicals at Nike look very, very weak here ahead of earnings, and we'll. I shouldn't say very, very weak, but it is trying to find support at its 50-day moving average and not having much luck here. The stock is down $1.13, 2.1% to 53.70. Let's check in on the weekly chart, because I thought Nike's weekly chart, maybe it was a different chart I was looking at, but let's take a look at Nike on a weekly. Yeah, it's actually not. This is actually what a cup with handle pattern looks like. But when a stock forms a cup with handle pattern, that is a bullish chart pattern to monitor, because they can yield breakouts. But typically, I like to see that handle area form well above the 10-week moving average. That's a chart pattern that's forming after showing relative price strength. So the fact that Nike is having problems here are right around its 10-week moving average as it forms its handle area tells me that its technical picture may not be as strong as it looks. But Nike, after the close, expected to earn 67 cents a share, up 12% from a year ago. Sales up 7% to 6.2 billion. And also Silver Wheaton, SLW. Let's take a look at a weekly chart for Silver Wheaton. And this is a stock that you can see technical picture looks much worse than Nike at this point. Resistance at the 10-week moving average for quite some time. Stock right now trading at 31.02. Up 2% for the week, but a lot of sellers in SLW ahead of earnings. Expected to be up 20% to 49 cents a share. Sales up 35% to 259.4 million. Coming up next, the Tom O'Brien Show. Back tomorrow to wrap up the week with another edition of Breakout Investing. See you tomorrow at 3. Take care, folks.